Money FM 89.3. Best of breakfast. Companies to watch.
All right, time to get ahead of the game to check out what you should have on your radar. And we've got some help from Dan Koh as usual.
Hey, good morning, Ryan. Happy Wednesday. Looking forward to the mid of the week. Let's get you started with companies to watch. That's a segment where we spotlight and stock you up with ideas of listed companies that will call for your attention. So we're looking at market trends to risks, as well as hidden gems or warning signs to steer clear of. So 8855-0893 and tell us whether you think it's going to be hard or not. Ryan, you ready?
Let's get into it.
Okay, what are you wearing today? Your sneakers, I mean.
Let's take
your
a
footwear.
Let me look down. Yeah.
Ryan, I see you're wearing some like black,
Yeah.
like Converse like sneakers.
I don't think they've got any brand on it, so it's generic. Yeah.
Okay. All right, Ryan. Do you have any go-to sneaker brand that you would normally shop at?
I don't have a particular favorite one.
Okay.
The usuals, the Nikes, the Adidas, and so on. How about you?
Yeah, I suppose I would say the same. I think Nike and Adidas fit into what I would usually wear as well. But today, we're turning to a company that's primarily known for its comfortable, casual footwear and a strong focus on lifestyle and performance shoes. Returning to one of, if not the third biggest sneaker brand in the world, Skechers. Did you know that it was actually one of the biggest in the world?
The third largest after Nike and Adidas.
Yeah, and think memory foam insoles that boasts casual and athletic styles, affordable and mixed shoes for men, women and kids, often marketing to families. Have you owned a Skechers pair of shoes?
I can't say I have. I have seen it around though.
Yeah.
It was quite popular back in the day when I was growing up. Then it went away and now it's back on trend again.
Yeah, certainly back on again. Has done a lot of collaboration with various artists. I think they've done quite a bit of marketing across town. But the reason why I've decided to bring this company to your attention today is because Skechers, while it's the third largest company or sneaker brand, footwear brand, after Nike and Adidas, it has agreed to be taken private by 3G Capital for $9.42 billion in the footwear industry's biggest buyout to date. And that's exiting public markets after 26 years. As, you know, the popular shoe brand grapples with the impact of steep U.S. tariffs. So apparently, yes, Trump's tariffs is starting to take effect. A lot of these companies are starting to face a lot of pressure. And we're seeing now investment from 3G Capital offering $63 per Skechers share in cash, which represents about 28% premium to the stock's close on Friday when it was announced. But yes, since then, Skechers shares has jumped 25% on the news to about $61.86. And last night it closed off at about $61.36, still down about 8% year to date. But it's still regaining some ground after dropping nearly 30% this year after the company withdrew its annual results forecast back in April, warning of the fallout from U.S. President Donald Trump's 145% import tariff on Chinese goods. First things first, any surprises here in terms of their buyout, Ryan?
Yeah, it is a massive deal. Like you pointed out, it's going to be like worth billions of dollars to take it out of the public markets. So I think worth noting as well, the name 3G Capital has been in the game for other big acquisitions as well. So I think from a strategic point of view, there is possibly maybe some potential synergies with its other portfolio brands, how they can all come together. But I think this is the first fashion brand under this umbrella.
Yeah. $9.4 billion acquisition of Skechers. That's the second largest fashion deal ever after LVMH's 2020 takeover of Tiffany. And it came as a complete surprise to investors and industry alike. In fact, like what you've mentioned, 3G Capital is known for snapping up, companies like Burger King, Tim Hortons, and Kraft Foods. So a step into the fashion brand is certainly one that, a lot of people would be a little sketchy about. Let's just say.
Right.
Yeah. But let's look at how Skechers has been performing so far, and it has actually been on a growth streak, posting record sales of nearly $9 billion last year, with both wholesale and direct channels increasing double-digit percentages. In fact, analysts have noted that while they've been on a hot streak, the Trump administration tariffs has indeed still clouded the comfort sneakers brand's future, with the company saying that sales rose about 7%, but pulling its full-year outlook like what I've mentioned earlier, citing macroeconomic uncertainties stemming from global trade policies. But then again, it's worth noting that only about 38% of US sales are for products made in China. So it really just shows how it may not be as widely impacted by, the tariffs that we've seen Trump implement on China. 2/3 of Skechers sales came from outside of the US last year, split between Asia Pacific, EMEA, and China. And so technically companies like Skechers that have so much of their business outside of the US, according to analysts, are saying that they are still certainly well positioned because their businesses elsewhere can help to leverage from the impact of Trump's tariffs. But then again, going private has advantages during turbulent times for Skechers as well, because unlike most of its competitors, Skechers can work through the impact of tariffs and invest in pivoting its supply chain without needing to give quarterly updates on its progress to investors. So how it fares remains to be seen, but while 3G Capital is best known for its blockbuster deals in the restaurant sector, hopefully it translates well into the fashion industry as they step into it for the very first time. So as of now, I guess I'm going to go with a relatively warm outlook for Skechers. What about you?
See what I did there. Step into it. Okay. Very
Yes,
good.
right.
Very nice. All right. So I'm looking at how things have been playing out, I suppose, with the tariff environment. It does kind of make sense for you to go private if you can.
Yeah.
To just navigate the choppy waters. Of course, strong backing helps. And of course, the potential synergies. Worth noting as well, Skechers has also offered shareholders the option of accepting cash of $57 instead of $63, plus receiving one unlisted non-transferable share of the privately held company for each current share they own. So another option for shareholders.
Yep.
So I guess for shareholders, it's a good deal.
It is certainly a good deal, and that's what we're seeing on TipRank's, Yahoo, and Barron's consensus rating, giving it a strong buy as of the 7th of May. So that's all we have for today's Stock in Focus, Skechers. Now, Ryan, did you know that Skechers was actually set up to act as a British label Doc Martens, the US distributor? Now, but the founder actually decided to focus on using what he'd learned through LA Gear to design and market his own brand. So, if thieves wear sneakers and artists wear Skechers, what do linguists wear?
I don't know, man.
Converse, Ryan. And that's all we have for Skechers.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.